Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Tuesday evening, the 5th of July, 2022. Hope you had a great holiday. Unfortunately, in Chicago, we have a suburb, Highland Park, where they had 6 deaths, 30 people shot by some nut with a rifle. Enough of this already. This one hit home. They shut down many of the suburbs. It was just terrible. All right. Markets get bounces. That's what markets do. Nothing grows to the sky and nothing goes typically just straight down. And that's what this market did. Here, let me share with you something I've learned over my 53 years in this industry. You get these longer holidays. Algorithm traders come out of the market sometimes, and then they start reestablishing positions, not in the aftermarkets. They wait for the morning markets, and that's when they come back in. And events happen. I see it in the futures. I see it in the SPDR ETFs and the individual stocks. And then the day digests what went on. Often, it's the wrong thing to be doing. I've learned that I often wait and let the first day of trading after a holiday pretty much go by me, because reversals happen a lot. And today we had some of that, and I think this is pretty exciting. I think that unless you take out today's lows quickly, you have a strong shot of getting a rally that carries further in all the stock indices, maybe up on the weekly charts to the weekly 18-day moving average of closes. But I don't see a change in the big trend. This bear market is not over. Another bounce is happening. That's what it is. But each one carries like so, and then you make a lower low. Eventually, that won't happen. Okay, we wait for it. Right now, in Google, I'm looking at Google because it was a big performer. It gained 4% today. So I'm looking at Google going, hey, what's going on here? We haven't looked at this in 6 months or a year. So I said, hey, let's bring it back. By the way, Chewy, I've dropped covering here, but it was up another $3.50 today. So I think I've done my job in that. So I'm looking at this going, well, what do we have? Well, we have an overall trading range from that high to that low. Then we narrowed in a low over here, and this is validating it. We're right in an area here where, let's call it this 2100 level is something of a good zone. Why Google stays with these prices and doesn't do a split is insane. They should do a split. Number one, they'll get a bump in their stock. Number two, what would happen? More people would trade it. Take a look at this move. So what did the market do? It came in, opened, fell to a new low from this vertical price decline, and away you get your spin. Got to be careful on days like today. Where did you go? First thing you go back to is the 18-day average of closes. The next one's the 45. You could go to 24.74.5 roughly. I've got my doubts about that. I'd look at the Bollinger Band, and I think that'll be the bigger resistance. And that's at 23.66, a zone we've been at. And that number's going to fall tomorrow when we reopen. That's just how the nature of the Bollinger Bands will be. Do I think we have a trade bottom? Not as good as in the stock indices. I think you have nothing. I think you've got a higher high, lower low in a market that only in the beginning of June did it hit a Bollinger Band, and prior to that, since then, it has stayed away from Bollinger Bands. I think you got a spinning market, more of a trading vehicle, not a trending vehicle. When I look at the slow stochastics, momentum had been pointing down. Now it's neutral again. I don't see anything exciting. I'm real disturbed about AMC. I know a thing or two about this. Today, my eyes perked up. In Chicago, they're bringing back a big chain. Discount days. You only bring back discount days in the summer if you're not getting the business you want. This is what that's telling us. Lower high, lower low. I told you on the way up that I thought this market would have resistance here. I said to you back here, and this is all on YouTube, I don't think you want to be short anymore going into the summer months. If it's going to get a play, it's got to come now. I haven't changed my opinion about that at all. I don't think this is worth trading in between upper and lower Bollinger Band, and I'm very bothered that momentum is starting to turn down again. If this stock can't do well in the summertime, just before the kids go back to school, then I'm going to look for this to become a top and this market to break down. I want to see the market go up. I don't think it's going to. Apple should be good. We talked about this. There's nothing but every single day I read a new article on something of one of the products that Apple's bringing out in September, the enhancement. So the press is here. You're seeing the higher lows, higher highs. I personally think that Elon Musk is onto something when he talks about maybe he should develop a low-priced phone. You know, low-priced today would be a $300 to $500 phone that has all the features of an Apple. It would not be an easy task. You know that, I know that. But when I think of what my Apple 14 is going to cost me, I'm bothered by it. I'm probably going to be spending $1,200 plus for a phone. Something not right there. And I know you're going to tell me, Ira, look at all the things you use it. How often are you on it all day long? You're right. I agree with that. It's certainly better than a ring on your finger, unless it's your marriage ring. You understand that. But there's a reality to this. Other things fall in price. They're commodities. Apple has a pretty neat game. And they're able to just get guys like me, not suckers, guys like me. I'm not a sucker on it. I love their product, buying it. If not, I go out and buy the Pixel. I buy another phone. I think they have a superior phone. Disney sort of caught here. No trend, caught at the 18-day average, waffling. Why isn't this stock even doing better is my problem. The airplanes are full. People are filling the parks. Why isn't this doing better? And they've got a reasonable streaming product. I want to see what happens. I'm neutral on that on this chart, as you can see. XLF, if you get over 31.98, especially on a close, could set the market wherever that Bollinger Band comes in tomorrow. That could be your upside target. The resistance is the red line. So even though the trend has got higher lows, higher highs, being under the red line, the 18-day average, means the bias is down. You filter the swing line, these brown lines, with bias. If bias is down and you get a buy signal in the swing line, the most it means is you're going back to the 18-day average. Reason not to be short, but not a reason to be long. You got to be over that number. The same thing happened here in the industrial sector. And what did you do? You picked up into that resistance. The trend is still down. And traders will probably look tomorrow and make some decisions what they want to do here. If the 18-day average falls very much, I have to wait and see what it's going to do. It's potentially something I'd consider a short sale in. Semiconductors today, the way that I teach in my enhanced Bollinger Band course, IraEpstein.com. My name, IraEpstein.com, under education. Today's a cover your short day. Were we fully embedded? Well, we can't count today, but we can go back and see what happened prior. Both numbers were under 20, not the day before. So, right here, Thursday, Friday, both under 20. Were we open on Monday? Oh, let me think about that. No, we weren't. Today we were, which means when you get down to that Bollinger Band, even though you embedded today, you're supposed to come out of all the shorts, every one of them. And on the rally, consider reselling into that. You're already off that low by a pretty good number at 141.96. You're well off that low at 147.72. That's a big hit. That's what my work would have said to do. In XHB, housing. So today I was telling people in real estate, XLRE, okay, if you're going to be a buyer, it's right here at the 55.89. You got to then look right here. Stop's going to be 54.03. I think it's a short-lived rally, but would I have you do it? You're overbought. Overbought's another filter. Let the next guy own it. I don't want to be in that. XLE, okay, you're in a short covering area. You have an embedded reading. You're approaching your 200-day average. Now you want to start taking some money off the table. It's the way I teach in my enhanced course. The sell zone's been all through here. because you've had that embedded reading. Take the course again. GLD, you're back under the lower Bollinger Band. What do I tell you about being short under a Bollinger Band or long over it? I want no part of it. Only 5% of the time do you stay like that. Nah, there's better things to do. Let it embed and I'll have a new trade. Let it work that off. I don't care. Let it go lower. I could care less. Doesn't matter. It's not a good percentage. Same thing in GDX. It's embedded. It hasn't offered you a sell on a rally. Give me one above this number. Get up into this zone here, and I'll be very interested, but not here. Copper. Now I think it's time to be covering shorts again. Each time you hit this Bollinger Band, you seem to spin away. You hit it here and didn't do too much spinning. You came down, moved to the right. So if you get down there, that's where the pros are going to cover some shorts. What is copper telling us? Copper's telling you and me, don't be suckered in with people saying the economy's not as bad, it's going to be soft, whatever. It might be in the U.S., but copper's not a U.S. commodity. Copper's a world commodity. And be it Europe, Asia, they're talking in China, they've got another round of COVID going inland now in the industrial sector. This isn't good because the way they treat it is they break their economy. They tell everybody to stay indoors. Copper knows that because China buys 50% of it. The market sees it, but it's not just about China. It's about everybody in a recession. Problems. Wait for the rallies. The AGG, the I-cores, this is like the bond ETF. It's a place to come out along. It's not be putting on them. I know interest rates have slipped a lot, but I also know this is the month of July. Oh, gee, God, what's wrong with me? The Fed meeting, isn't that going to come out? And tomorrow we get the FOMC notes. Oh, my gosh. You think they're coming out and saying, no, maybe we have to pull back? You think they're going full bore? I'll let you want to own it up there, whatever it's going to do. UUP, you're over the upper Bollinger Band. I don't even see a trend. I see a lower low, higher high, overbought. I don't see anything to do there. FXE, you do realize you got under 103 today in the euro currency. Did I not tell you before the summer came around? I think I said this in April and May. What a time to go to Europe. I have a buddy there. He's been there 4 weeks that I know of. I'm going to call him tomorrow and go, how are you enjoying your Europe? We were talking about it, and I said, I think your timing is going to be so on the money. And he's out of Houston. And, it's hot and humid in Houston. What a place to go to Europe. Lucky man. Anyway, falling down pretty hard right here. So you put it together. You try to come up with a game plan, and that's where I want to be your guy. In the mornings, give me a chance to show you what I know. What do I mean by that? A lot of you, if you're trading these ETFs and SPDRs, they're based on futures markets, the vast majority of them. Not every one, not by a shot, but the big ones, the stock indices, TLT, all these others. In some version, they're based on a GLD, SLV, COPX. I can go on and on and on and on and on. All right? So I start you with the futures, and I record around 5:30 in the morning or so. I start you with the fundamentals that's going on in Asia, Europe, the United States. Then if I see trade wrecks, we're going to cover 40 charts. We're going to get into them. And I'm going to lay out why I think the market's a buy or a sell, the exact point of entry, stop, what kind of stop to be using in the market, objectives. We're going to do it in approximately 40 or more charts on futures, and the same on the ETFs and the stocks. I mix stocks into that as well, and I'm rotating. I think you'll find that it's, number one, super inexpensive. I mean, really inexpensive. You're getting 48 videos, 15 to 20 minutes apiece for the month, Monday through Friday, daily one. Sometimes I'll mix in some weekly charts, and on the weekend, the longer-term weekly charts. They're important because they give you the bigger picture. How do you get this? Well, you can go to our website under the word education. You can come with me right here. Under the word research for this. And right here you can come up. There'll be an icon up there. It's the word. Again, just click it. You'll be right into the research section. Pick what you want. I think you'll find it well worth your time, effort, and like I said, super inexpensive. I'm Ira Epstein. You have a good day. I will see you tomorrow.